Derek Izuel, Chief Investment Officer at Shelton Capital Management, is here. We're talking stocks, and this is the Money Life Market Call. Welcome to the Market Call, the part of the show where we talk with experienced money managers about how they do their job, what they look for that determines their buys and sells, what they see happening broadly in the market, and how they put it all together. And it's going to be really interesting with my guest today and how he puts it together, because Derek Izuel is Chief Investment Officer at Shelton Capital Management. He is International Portfolio Manager for Shelton International Select Equity and Shelton Emerging Markets, SISLX and EMSLX. If you're looking for more than just the tickers, you want to learn about him and the firm and its funds, you're going to go to sheltoncap.com. Derek Izuel, thanks for coming back to Money Life.
Chuck, thank you. It is always a pleasure to be on your show.
Guests on Money Life, join me on the Gainbridge Hotline. Gainbridge provides direct access to trusted financial products that are guaranteed to grow your money over time without worrying about fees. Starting with $1,000, let the self-managed online platform give you the access and control to manage your money your way. Gain access, gain control. Gainbridge. Derek, we always start with methodology, but I have to say, like I said, right now I'm excited to hear about what you're talking about, because internationally, they're not unprecedented times, but they are times we haven't seen in a long time. So let's talk about what goes into your buys and sells, but let's also talk about, what these times are challenging you with.
Well, the big challenge right now is that the world, or at least most of the developed world especially, is fighting this battle against inflation. The sources of the inflation are a bit different overseas, more energy related than it is in the U.S., but it's still there. And in these global markets, certainly, inflation flows over one border to the other. We haven't seen inflation like this in a long time, 20 years or so. And of course, the real underlying effect of that inflation is to push interest rates up. It's another type of environment we haven't seen in a long time. So now we're getting higher interest rates, higher inflation, and thus the market is shifting. We're seeing this shift internally in the equity markets from growth that has been dominant over the last several years, thanks to these ever lowering interest rates, to value. Because now, as interest rates go up, those value stocks on a relative basis start to look better. And this kind of manifests itself in a shift from U.S. stocks to non-U.S. stocks, to international stocks, because U.S. stocks tend to be growthier. We have a larger number of those big growth companies that we all know, all the FANG stocks. There are fewer FANG-like stocks overseas, a lot more of sort of stable industrial companies, banks, energy, et cetera, more value firms. They're starting to find a bid here in an environment where interest rates are going up.
So, that's a positive. They're starting to find a bid here, yet the markets are still lagging and dragging. So people tend to say, in this market, okay, you want to be careful, but you still want to be long-term on the horizon. I've had folks say right now, if the blood's not running in the streets in Europe and international, it will be soon. So are you finding that the bargains are that compelling, or are you finding more that you got blood on your hands and you want to kind of wait a little while?
Well, yeah, when I say when you say they're finding a bid, it's all on a relative basis. They're just not down as much. So that's fair. But, and there are a lot of issues in Europe, and there's a tremendous amount of uncertainty, and that could resolve itself in either direction, just depending on how things go. We're finding better opportunities in Asia, and specifically in Japan. One thing that's true across all the international markets is relative to the U.S., they have been historically undervalued. They're always a little cheaper, but they're a lot cheaper, particularly at the end of 2021. That has closed in a bit, but it's actually closed in more in Europe than it has in Japan. Japan, that valuation gap is still pretty generous, pretty wide. And, right now, you've also got a pretty inexpensive currency as well. So you could look at a scenario, well, perhaps maybe inflation is peaking in the U.S. That's a conversation that's being had, and there's some credence to that. So maybe our rates are finding, a top, and that's going to provide an opportunity for that currency trade to reverse. So you're getting an inexpensive market, and you're getting the potential bonus of a currency reversal. So we're seeing a lot of opportunities in Japan right now.
In terms of what it then has to take for those opportunities to make it into your portfolio, what are the specific things you're looking for? And are you finding more companies able to achieve that bar right now?
Yeah, so our process is we build a very broad international portfolio across all regions of the world, including emerging markets, and for any type of size or type of company. There's from a universe perspective, we like to favor companies that are investing or running their business in a sustainable manner. That's a very important part of the investment principles of the portfolio. That does give us a little bit of a growth tilt because sustainable companies tend to be growthy, but we still have the ability to find those value companies that fit that bill. And then when it comes down to that, well, we segment the world into a bunch of different buckets based on where's the company located, what kind of business, what kind of industry are they doing business in, are they growth companies, are they value companies, are they old, are they young, with the idea of like what's the right metrics to use, what are the right criteria to use when you're analyzing those types of companies. We'll then do our analysis of the company based on that segmentation and use a lot of data science and other advanced methodologies to try and select the companies based on that segmentation. And finally, we use prudent risk management techniques to try and build a diversified portfolio across different regions, different industries, different styles of investing. The idea being is that for every bit of risk that we are taking for our clients, we want to make sure that we're being compensated by having more of these companies we find attractive that we think are likely to outperform the market in the portfolio.
What's a poster child for that methodology? I mean, what's the kind of thing that stands out to you as this is in the sweet spot, this is where we want to go?
Sure. So a good example of that would be Taiwan Semiconductor, a core position in the portfolio, a large position in the portfolio. We've held it for a long, long time. And look, we all are aware of the chip shortage. The chip shortage is priced into this stock. That's not a thesis to why to buy it. But when it comes down to it, a growth company, a technology company like Taiwan Semiconductor, what's important there is that they continue to exceed expectations, that they continue to execute, and Taiwan Semi has continued to do that. In addition, I think there's a bit of a discount built into it that people and investors are concerned about the tensions between Taiwan and China, and so that as a spin-off from the Russia-Ukraine war, that those tensions are elevated. We actually think it's the other way around, that the results of the Russia-Ukraine war has likely made China more wary of taking any action against Taiwan, realizing that they don't want to get overconfident in one of these situations, and that the ramifications in their position in the global economy and the global political environment would be damaged considerably if they were ever to make that kind of move.
So that's Taiwan Semiconductor, TSM. What's something else that stands out to you right now?
Another company that we've liked and we hold in our international portfolio is a company called GS Holdings. This is a Korean company. Unfortunately, don't have an ADR, but we like it because on one hand, they are one of these Korean conglomerates that holds a bunch of different businesses. So they have everything from electric power, they have retail, they've got energy business, they've got an online retail business. They even own a volleyball team, for whatever that's worth. But the point is that they have this group of companies, group of businesses, but they're a very high quality firm, and management is very good at executing. They continue to exceed expectations. It gives you some emerging market exposure, which we believe is something that will be valuable once interest rates turn, so you could get ahead of a little bit. So it's one of the favorite smaller companies in our portfolio.
And what makes you sell? When you're finding these things that you like, obviously conditions are changing, but you're not necessarily looking to turn over the portfolio too much. What's something that makes you say it's time to move away?
We approach our whole universe very systematically, and we have lots of processes that help us look at the wide universe of companies that we'll research, as well as the 50 or so companies that are in the portfolio. And ultimately, any company we hold on to has to do one or both of two things. One, we think it's going to perform better than the market, right, with selecting the stock, but also it does also contribute to the risk of the portfolio. It helps diversify us and allows us to hold other companies in different businesses or different parts of the world that we also think are attractive. Now, if a company if we're watching these things change all the time, and if a company doesn't fulfill those roles anymore, well, then we're going to go out there and find something else that does. And that's when we'll make that kind of substitution. We'll reallocate that position.
Now we're going to get your quick and dirty take on some securities that my audience is particularly interested in.
Quick and dirty.
It's all about the money, boys!
Oh yeah, it's always all about the money, but we get the take today on the money from Derek Izuel. He's Chief Investment Officer at Shelton Capital Management, Portfolio Manager for Shelton International Select Equity and Shelton Emerging Markets. You can learn more about the firm and its funds at sheltoncap.com. Quick and Dirty is where we put our guests to your test. If you want to test our guests, you need to send your name, your hometown, and the ticker symbols you're interested in to chuck@moneylifeshow.com. We're going to start today with a request we got from Sean in Grinnell, Iowa. He wants to know about Takeda Pharmaceutical Company. That ADR trades under TAK.
Takeda is one of the bigger, more mainstream pharma companies in Japan, and it's a great company, but it's facing the same sort of issues that a lot of pharma companies have been for many years. That is, their portfolio of drugs is coming under pressure by generics as they come off a patent in different parts of the world. And Takeda's portfolio is a little more at risk than most of those pharma companies. It is a useful exposure to Japan. If you want exposure to Japanese pharma, it'd be a good position to have. But we like some of the other areas in Japan a bit better. And a different Japanese idea that we actually hold in the portfolio is a company called Shinetsu Chemical. And they've got a mix of semiconductor components and inputs, as well as construction materials and even fertilizer. And they've got this, again, one of these diversified product lines, great for uncertain times. Some part of their business is always doing well, and it's well managed. And actually a pretty reasonable valuation right here.
Is it available as an ADR?
Yes, it is. It doesn't trade that much, but it trades enough for retail investors for sure.
So it's a cautious buy, kind of good company, not necessarily a great stock right now, at least when it comes to Takeda Pharmaceuticals, TAK.
Just go slow and be smart.
The buy instead was Shinetsu, where the ADR trades under SHECY. Rick in York, Pennsylvania wants to know about MI Homes. That's MHO.
Look, we all know the housing market's in trouble overall, but a lot of that's already priced in. I think everyone is quite conscious of the effect that higher interest rates and a slowing economy is going to have on what was already an expensive housing market. But one thing that hasn't changed is that there's still supply issues, and there's still a need to build a lot more homes. So a company like MI is really benefiting from this supply imbalance, and it's really pretty inexpensive right now. It's really inexpensive because of everyone's concerned the housing market. So there's lots of upside here. I think it's a worthwhile position to have if you want exposure to the housing market. A bit contrarian here, and could actually be a big winner if things turn around sooner than everyone thinks.
Let's hit rock bottom. Come on, let's buy.
So that's a buy on MI Homes, ticker MHO. Morris in Bradenton, Florida wants to know about Thales. That ADR trades under THLLY.
Right. So Thales, aerospace and defense systems provider out of France. So they build all the components and things that go into aircraft and other defense systems as well. Obviously, firms like Thales are all being beneficiaries of the increase in defense spending. But Thales is certainly one of the more higher quality ones with a stronger balance sheet, stronger cash flows. And so while lots of firms are going to benefit from what's going on in Eastern Europe, another good one that we like is called Rheinmetall. It's a German company. They make tanks in Germany. Stick with these higher quality firms like Thales and to play that trend and the greater emphasis on defense that we're going to see in Europe post the Russia-Ukraine war.
That's a buy on THLLY, Thales.
Would you mind stepping aside? I've got a purchase to make.
Richard in Chula Vista, California wants to know about Rambus Incorporated, RMBS.
Right. So Rambus is an interesting company. They provide semiconductor technology that helps semiconductors communicate to each other at very high speeds. And it's a very solid firm. The intellectual property that they possess in this technology is very valuable. And they continue to have strong quarterly results. We like the messages we see from management from them. We also believe that should there be any kind of slowdown or reduction in expectations in the semiconductor business, Rambus is well positioned as like a defensive chip company. They have a very broad client base, and it's unlikely that their business will suffer as much as other chip companies should we see see that semiconductor business turn around.
Come on, let's buy.
It's a buy on Rambus, RMBS. And last, in the limited time we have left, for Ray in Buena Vista, Florida, XPeng Incorporated. That ADR trades under XPEV.
Yeah, so XPeng is an electric car manufacturer. They manufacture both the cars as well as components for electric cars. Solid intellectual property and technology here. The challenge with something like XPeng is the valuation. The valuation is pretty high. There's high expectations here. We do hold a little of this company in our portfolios, but we are pretty conscious here that the valuation might be getting a bit stretched. So if you're going to buy into a firm like this, be cautious because of that high valuation.
Yeah, so it's hold it if you've got it, but you're waiting for a better time to buy more, or if you don't have it, you may be waiting for a better entry point on XPEV.
I'm just taking my time before making the move.
XPeng, that is an ADR. And, well, we can't wait anymore till we make our move. We've come to the end of our time with Derek Izuel. But Derek, this was great. Thank you so much for joining me on the show to talk about all this.
You bet, Chuck. Always a pleasure.
Derek Izuel is Chief Investment Officer and Portfolio Manager at Shelton Capital Management. He oversees Shelton International Select Equity, SISLX, and Shelton Emerging Markets, EMSLX. And come back, you'll find out where he agreed or disagreed on one or two of those picks. We'll tell you more about what's coming tomorrow. We'll tell you what you're celebrating today, and we'll all cross the finish line together.